Welcome, market aficionados. When price breaks, it's like a change of a season, from cold to warm, from dry to wet, or vice versa. Breakout is the very fundamental, very basic, yet very profound idea in chart reading. Breakouts are of higher importance than any other point on a chart. From them, targets can be estimated. From them, timing can be established. Support and resistance lines can be run. The significance of breakouts is often underestimated and underutilized. However, in this video, I won't be able to fully explore and examine the concept. It would take probably 120 hours of recording. It may take millions of charts to observe before understanding full implications, and a lifetime can be spent on studying. Let's start with the basic problem. Often breakouts are poorly defined, and I don't mean 1 penny or 2 over the line drafted from 2 random points, a couple candlesticks for confirmation, or what thickness of the line supposed to be. By fully defined, I understand having confirmation in 4 categories. That is, breaking trend, pushing volume, having volatility on your side, and turning momentum. You want to see full synergy in the chart. Pointers in 4 categories all synchronize. Some may argue that there is a distinction between secular and ordinary breaks. However, when there are real money on the line, the only choice is between clearly defined breakouts or ignoring negative readings on some indicators, resulting in foolish risk-taking. Let me explain. The chart you see is a mess, so let's go to the next one. First of all, charts have to be as big as screen size allows for comfortable viewing. Some indicators has to be fairly tall. I know, there's a whole generation using font for everything, but a small screen is a very bad tool to read charts. When doing anything or whatever thing, you should ask yourself, what really are you doing? Chartist domain of operation dwells in perception, and that includes visual perception. You need to see everything in detail, every nuance, every twist. That will even help you to deal with psychological biases. There are times when confirmation bias kicks in and you want to see everything in one direction only. Please allow big chart with at least one indicator per category yell at you. Don't do it. Secondly, never mind setting at the moment. I explained them in another video, link in description. In this piece, I would like to present a general idea and start with weekly chart of Eli Lilly. Weekly to start because there is a basic rule that larger the time frame, it takes dominance over the trend. Even if you trade on 1 minute chart, you should be aware of daily. One more note on this chart. Weekly breakouts don't happen every month, not even every year. The year is 2012. The Mayan apocalypse did not happen, and the price of Eli Lilly is breaking out. At the same time, it's breaking out through the downtrend from that consolidation that lasted for a decade. It's breaking through moving averages. The simple moving averages are marked in green and red. The adjusted moving averages are marked by shaded area. I ignore extremes, and there is a reason, and the reason is they are extremes. Let's start with the first indicator. And the way I stack indicators is just a matter of personal preference. I usually start with those that I ignore most and end with those that I ignore most, or I tend to ignore most. First is vortex indicator, very complex indicator. That is, it not only shows trend, but the strength of the trend and give you some sense of volatility also. You can go fancy with vortex and grab Fibonacci fan, go with the first impact, and you see it's just breaking in 2012. The negative vortex marked in red is breaking in 2012, so you got first confirmation. But let's keep it simple. Positive trend, positive vortex, you have trend going, breaking in 2011. The inside trend, the absolute trend is breaking in 2012 and is breaking through that Italian cat, the line in the middle. So you've got one indicator that pointing to define breakout. Let's go to Williams and momentum. As you see, the downtrend is expiring in 2009, 2010, 2011. In 2012 is crossing the 50 line or minus 50 line. On balance volume, one of the most powerful indicators and one of most difficult to use, like any powerful tool would be. You've got the downtrend breaking up in 2011 or 10. Then you have new highs in 2011, and in 2012 it's really well established. So you've got confirmation that there is inflow of money. Checking money flow. All that decade, 2000 to 2011, is basically negative or some attempts to break up, but nothing really happening. In 2011 is breaking up, is breaking to new highs, and in 2012 is pretty well established at that moment when the breakout is happening on the price. And last, KST, double KST I use, is breaking through zero line in 2012, is breaking through previous highs. So you've got momentum, you've got volatility, you've got trend, you've got volume breaking out. You are pretty sure that you are in the right position. Let's go to the next chart. There is a lot of truth to the saying, the price is everything. Everything should be seen in context of the price, most of the time. Sometimes volume takes a leading hand. However, if you examine the price action only, it's like flying in the fog without instrumentation. What indicators you use is matter of experience, personal experience with them. Sometimes I use more than one indicator per category for different functions. Like one may specify trend, the other in the same category may specify divergences. Eli Lilly daily, year 2015. As you see, the price is running on the top of a trend, on top of moving averages. So the breakout is basically continuation breakout. And when you look at the indicators, you should expect a continuation to show up more than hard breakouts. On Vortex, you look for support. There is support on that trend. And again, I ignore the extremes here, and they are further beyond the chart, but never mind. This is bouncing right here, and there's of course small breakout here. On momentum is well established. There is a minimal sign, or you can cut the momentum in half or only quarter of that span to see a better picture. On balance volume, but on balance volume going to new highs is well established. So you got basically confirmation of the trend going on more than a breakout. There's very small consolidation. If few months is a small time or a small period. Same with checking money flow, and KST is bouncing off zero line. Then you have year 2017. The price is trying to move in 2016 is trying to move below moving averages, trying to break down and bouncing back and not continue. It's stuck for a year, and let's see why. See, on balance volume, there is no breakout. On momentum, there is a breakout. And on vortex, you see the vortex, positive vortex in green line is way below any chance to break from that trend, downtrend. So you have two not confirming and one confirming the breakout. Same on checking money flow. There is no confirmation. Then trend is going down. the money inflow is falling. On KST, there is a cross through zero line, but it's not the ideal. So basically, if you enter in 2017, you're stuck for a year, your money doing basically nothing. Then in year 2018, you've got break to new highs. On balance volume breaking up. Momentum is already well established. It was testing that previous breakdown. And Vortex is breaking the trend line. KST, for KST I use some trick. I use Andrews Forks. And it's breaking in 2018. Checking money flow. Look, the trend is breaking zero line. So we got full confirmation. And if you enter here at $80, today it's $228, and most likely will continue for now. Next chart. Every price action has own character, own personality. Each chart tells a story. If you rush with one odd oscillator or an imaginary pattern, if you are too quick to draw a line and call it a breakout, it may cost a lot of money. This is not a video game where you have to react instantly. Take your time to consider all aspects of the chart and let opportunities come to you, not the other way. Don't ever think that there are consistently profitable approaches based on some simple automated strategies. Well, there is the arbitrage and high-frequency trading, but that is beyond the scope of this video. So, never mind. Reading charts is a skill, or rather a set of skills, developed over time. You read the chart like a story on a timeline. Eli Lilly hourly, year 2020. You have to break from the trend, although you should mark it differently. Remember what I said about ignoring Remember what I said about ignoring extremes? There is a huge philosophical question, where the trend starts and where the trend ends. But basically you've got breakout from a base, from consolidation. On momentum was eager to go early, tested back, and in 2020, late 2020 is well established. Now, what I said about story, this is on balance volume. On balance volume created sort of a head and shoulder, and is breaking from that formation, staying above and moving up again right here. So you know that there is confirmation. Vortex is breaking the downtrend early, and that's certain peculiarity. It's often happened on Vortex, then testing back before taking off. But in 2020, late 2020, is well separated and going on its way. Same with KST. You have breaking the trend, breaking zero line, a bit early even. Thus you have confirmation. Later on the break is tested over here and retested over on KST. But let's go to 2021. 2021, it's a bit of different kind of breakout, because you have drawdown, very rapid drawdown, and come back and break. That's a mark of short squeeze. KST is breaking through zero line, and shortly after is breaking the trend. Momentum is breaking from sort of a base right here. Well, it's breaking from that base above -50 line, so it's perfect. On balance volume is a bit slower. It's breaking here from that rapid trend, but the whole direction of on balance volume is breaking a bit later than the price. So even if you enter at 160 instead of 150, you are still ahead of the game at 200. And you see the momentum is still running, and Eli Lilly on hourly chart looks pretty good. Then you have Vortex. Vortex is breaking out. It's another bounce over here, testing momentum going back over 50 on balance volume. So we've got another break here. Now let's look quickly at one example of the breakdown. I ignore again the extreme. I call it stem on the uptrend right here. 2008, 2017, same situation basically. The price is breaking through downtrend, through moving averages, on balance volumes breaking down. There was an attempt of on breakout and a fail, so that's like an extra point for confirmation. Momentum rising, breaking, rising, breaking, and vortex. This is support line on a vortex, negative vortex, because the whole decline started way in 2000. Then the vortex show that is bouncing off that support. Then in 2017 you have breakthrough positive trend. The negative trend is breaking out from the base. Checking money flow is falling in 2008 below trend line, below zero line. You see there is negative outflow, and like I said, the initial breakdown was in 2000. Then there was some inflow of money, but fairly puny, and gave you some sense that there is not much strength in that move. In 2017, checking money flow requires more elongated explanation, and I will do another video about that, but basically it's dropping below previous support line and dropping rapidly and follow through zero line. And KST is breaking through zero line, through previous support, a bit late here, but fast KST is breaking down here. In 2017 is rather leading. And the last, a little gem. I may explore in some other video like many other things. But if you have a base, this is Sorrento Therapeutics Daily. If you have a base and if you start drawing the line from the base through the breakout, you may mark angular support. And maybe I may be the only one who is angular support and looking at the angles on the charts. Everybody is going by horizontal and support and resistance, but there is much more in every chart than only those horizontal levels. Breakout is not some signal, it is condition, it is a situation, it is a tale that you will tell to your grandchildren. Investing is a game of opportunity, but first you have to define its presence. If you don't see well-defined opportunity, move to the next chart, it will come.